Box just reporting earnings results, but the real drama for the cloud software vendor right now is this fight with Starboard Value. That brawl going red hot. Starboard nominating its own candidates to the board ahead of Box's annual shareholder meeting, pitting its candidates against CEO Aaron Levie and two other directors seeking re-election. Starboard pointing to what it calls Box's poor results and subpar shareholder returns. Aaron Levie, though, hitting right back.
We're very aligned that the strategy is to really drive greater growth and profitability. And I think when you look at our share price returns as a result of that strategy being executed, I think it's pretty clear, that strategy is working at this point.
Now, another key area of contention, an announcement in April that KKR would buy $500 million worth of Box's stock. Starboard not happy, saying this was done to buy the vote ahead of this election contest. Aaron Levie, though, saying that isn't true.
I think it would be hard to knock the credibility of KKR and their views of long-term, profitable shareholder returns. So KKR led an investment in the company. We're very confident that they are long-term believers in the business and the current plan that we have. They have a very strong track record driving significant shareholder returns for their investors.
Now, some analysts I speak with, like JMP's Eric Supiger, think Box could still be an attractive acquisition target for the right suitor, maybe IBM, Eric says, or even Cisco. Levie says he will always consider the best path forward for his shareholders, but he's excited, he says, about the path Box is on right now. Back to you all.
Josh, the chess matches here between companies and activists, always interesting to see which way they tack. I mean, some people might forget, before Satya Nadella, they were activists after Microsoft. Seems funny now. But if you look at Box and Dropbox, both of them have kind of underperformed some of the broader cloud expectations. They both have market caps under $15 billion, for example. But I just wonder what, if anything, analysts are saying about the likelihood that you could totally reinvent a company like this under either activist or private equity watch without founders. That doesn't seem likely either.
Yeah, so to your point about share performance, listen, that is certainly something Starboard is bringing up here. Now, Aaron Levie is right. If you look this year, I think Box is up 25% in the past 3 months. But if you pull back the chart, 2020 was a different story. Certainly, it finished up 7%. That underperformed some cloud rivals, obviously, but also underperformed the market. As for your question, John, about what Starboard wants here, there are some folks who still think Box is an acquisition target. I was talking to one analyst last night who thought some of the more muted reaction, perhaps, in response to this print was because, well, to the extent that Box keeps hitting its targets, maybe it mutes the idea that Starboard is actually going to win this thing, get its own candidates on the board, and push for a sale. But we'll see what happens.